This is the second of two videos with Jessica Nelson on how the Secure Act 2.0 could positively affect your retirement success. I think that you'll find the information that Jessica will provide very beneficial. And once you hear it, I think you'll hope as I do that this legislation, which has bipartisan support in Congress, will be passed quickly. Would you like some more help to achieve your secure retirement and financial independence faster? How about some more help so your employees, if you're a practice owner, can have a better chance of achieving their secure retirement? Today I'm interviewing my colleague, Jessica Nelson, about the Secure Act 2.0, some proposed legislation in Congress with a good chance of becoming law. If it does, this extra retirement help could soon affect you and your colleagues. So now is the time to understand how you can benefit the most from it. Hello everyone, and welcome to Wealth Matters for Physicians by Altfest Personal Wealth Management. I'm Mike Prendergast, a director at Altfest's Healthcare Practice Group and the host of this channel, which provides key investing and personal financial planning insights to help physicians achieve their important financial and life goals. Before we bring in Jessica, a few words about Altfest. For nearly 40 years, Altfest Personal Wealth Management has been helping physicians holistically optimize all areas of their personal finances in a fully objective, fee-transparent manner, while as a legal fiduciary, always putting our physicians' best interests first. Altfest is honored to be the preferred wealth manager for members of the Medical Society of the State of New York, the preferred wealth management education provider of both the New York chapter of the American College of Surgeons and the New York State Society of Orthopedic Surgeons, and a corporate partner of the Medical Society of New Jersey, amongst other associations. As I mentioned, my guest today is my colleague Jessica Nelson, who some of you may recognize from a previous appearance on Wealth Matters for Physicians. Jessica is a financial advisor at Altfest Personal Wealth Management, where she helps our clients optimize their investments and all other areas of their personal financial lives. Jessica is a CPA, a certified financial planner, and has a master's in financial management. Jessica, thank you very much for being with us again today on Wealth Matters for Physicians. Jessica, could you talk a little bit about how Roth contributions are affected by Secure Act 2.0? Mm-hmm. And first of all, maybe just a little one sentence on what is a Roth contribution.
Absolutely. So when you're contributing to your plans, you have two options, what's known as traditional or Roth. So traditional contributions are considered pre-tax contributions, meaning you earn your salary, you then contribute to your retirement plan, and then you pay taxes net of that. So basically you're getting a tax break up front. With Roth, they're considered post-tax contributions. So you earn your salary, you pay taxes, and then you contribute to your Roth contribution. So you don't get any tax credit up front, right? There's no tax benefit in this year. However, once you're retired and you are of age when you're making qualified distributions, there are no taxes on those withdrawals. So whether you do traditional or Roth really depends on what you believe your tax rate would be now versus in the future.
Great, and I think also with the Roth, if you make contributions, when you take out one, I don't think you're required to take required minimum distributions for a Roth,
that is
whereas
correct.
you are forced to because you haven't yet paid the taxes,
Mm-hmm.
and the IRS wants its tax money. But since you pay the taxes up front with the Roth, you don't need to. You're not forced to take out anything with the Roth. So thank you, Jessica. That was a nice little explanation of Roth versus contributions versus traditional pre-tax contributions.
Mm-hmm.
So with Secure Act 2.0, what's different with Roth contributions?
Yeah, absolutely. So one of the biggest changes that we're seeing to Roth contributions with Secure Act 2.0 is the way employer matching contributions are treated. So currently, one of the benefits of contributing to your employer-sponsored plan is your employer may match your contributions either up to a dollar amount or up to a percentage of your salary, right? And right now, the way those contributions are treated are all pre-tax, meaning they all flow into that traditional bucket. So from that amount, there's going to be those required minimum distributions, and there's also going to be those taxes in retirement. Under Secure Act 2.0, you actually have the option of whether you want to treat those employer matches as Roth or traditional. So this is another thing that just allows for more planning opportunity.
Great. And so if you asked your employer to make Roth contributions into your retirement plan, then I take it then the employee would have to pay taxes at that time.
That is correct, yes. So that is a consideration when you're thinking about which one makes more sense for you. One, you have to think, do I have the funds to pay this tax liability now, right? So that's one of them. And then two, comparing about which one, where would you pay the least amount of taxes? Whether paying taxes up front would result in a lower tax liability or paying taxes during retirement.
Right, I know that's something that we help our physician clients with a lot in terms of some years might be good to make a Roth contribution or a Roth conversion. Other years might be good to kind of load up as much on a pre-tax basis.
Absolutely. So when we're thinking about stuff like that, we want to look at where your situation is that year, right? Maybe you're having a good year and your practice did really well. So Roth doesn't make that much sense because you're in one of the highest tax brackets you've ever been. Or maybe your year is not so great, right? Maybe things that we were seeing with COVID, right? Maybe you weren't seeing as many people. Maybe in a year like that, Roth makes the most sense.
Excellent, excellent. Moving on to the next enhancement of Secure Act 2.0, which is eligibility for part-time employees into a company's workplace retirement plan. So this, I hear, Secure Act 2.0 makes it easier for part-time employees to be eligible. Is that true?
Yes.
And how does that work?
That's absolutely true. So under the original Secure Act, one of the provisions were that any part-time workers who worked 500 hours over the course of 3 years were eligible to participate in the workplace plans. Under Secure Act 2.0, those 500 hours will now be over the course of 2 years rather than 3 years. So what we're going to see is more part-time workers being eligible to participate in these employer-sponsored plans.
That's excellent, because a lot of part-time workers don't have the eligibility right now. Like you said, this is going to make many more people eligible to save for their retirement in a tax-efficient way.
Absolutely, and this is also a consideration that many business owners are now going to have to think of, right? Maybe you're someone who had a lot of part-time workers who maybe they weren't eligible for these plans. Now some of them will be eligible for these plans, meaning that you're also going to have to match for them as well. So these are all considerations that we want to take.
Right, if you decide to make a match, which is going to be very good for like employee engagement and motivation and retention and things like that.
Yes.
Great. So lastly, Jessica, I think there are a few like miscellaneous changes that have been made into Secure Act 2.0 legislation. Could you just briefly tell us a little bit about them?
Yeah, so there are a number of changes, but I definitely want to make sure that I mention at least these last two before we end our discussion, right? So one of them being the enhancements to 403B plans. So under current law, you can't have annuities in 403B plans, but they are available in 401ks. The Secure Act 2.0 would allow that, just meaning that now individuals who have 403B plans have more investment options, right? And we can better tailor your plan to your needs. So that's a significant change.
Excellent.
Yeah, another change that is, that's kind of widely talked about is the allowance of student debt payment as elective deferrals. So this dates back to a case, or like a ruling rather, that came out in 2017, 2018, where an employer wanted to change their 401k plan to say that any student loan payments employees were making would be considered elective deferrals, meaning that the employer could do matching contributions based off of that student loan payment, meaning there could be employees who actually weren't contributing to their plan, but their employer was. And actually the IRS, gave the green light on that. So now what we're seeing in Secure Act 2.0 is that kind of just being written into law, where they're saying, hey, employers, if you would like, you can actually make matching contributions on your employees' student loan payments.
Excellent, Jessica. So that sounds really good, because that's another way that employees potentially could be eligible to get a match from their employers. Not only would they be able to get a match by contributing directly into their 401k or workplace retirement plan, but if they made student loan payments, those potentially could be eligible if the plan's key documents allowed for it.
Yes, absolutely, which is pretty significant, because there's lots of talk right now around student debt, right? And we constantly see this when we're working with our young professionals, when they're struggling, whether should they save for retirement, should they save for a home, should they pay off their loans, right? And sometimes what happens is maybe they're not saving for retirement at all, or maybe they are saving, but they're not, saving enough to max out on employer matching. Right. So what this would do would make sure that they don't miss out on those important employer matching.
So thank you very much, Jessica. You really touched on a lot of the key points in Secure Act 2.0 and how it can really benefit both employers and employees. So what do you think is the likelihood of this act passing? I heard that there was some bipartisan support.
Yeah, there absolutely was. This pretty much passed in the House with full support, and now it's awaiting vote in the Senate, and we do anticipate this to pass as well. It's just a matter of time. There's always a possibility that they could make additional changes, but overall, the Secure Act 2.0 is widely accepted.
Well, again, thank you so much, Jessica, for being with us today on Wealth Matters for Physicians. As always, you've given us a great deal to think about, and we really, really appreciate it.
Absolutely. Thank you for having me.
If you'd like to discuss the information explained in today's video, receive a complimentary analysis of either your investment portfolio or retirement readiness, or discuss any of your other personal financial planning areas with an Altfest professional at no obligation, please contact my colleague Jesse Freeling at 212-796-8732, or by emailing Jesse at his email address, which is also in the description of today's video below. If you like today's video about providing insights to help physicians optimize their personal finances and achieve financial independence, please click the subscribe button and hit the bell icon below to receive notifications each time we release a new video. If you think that a fellow physician would find this video interesting or useful, please share it with him or her so that they can also optimize their finances. Lastly, as always, this channel is for you, and we want to make it as useful and as enjoyable as possible. If you have topics you'd like us to cover, like or dislike certain things that we're doing, or have any other feedback, we would love to hear from you. So please share your comments with us in the comments section below. Thank you very much. Well, that's all for today, physicians. I look forward to being with you again in our next video. And until then, be well and remember to keep on optimizing your finances, or let us help you if you'd like.